Hey, good to see everybody. The Iran conflict continues. The constriction in the Strait of Hormuz continues, and we have seen what's happened with the price of oil over 120 bucks a barrel right now. And it's not just affecting gas prices, Ted Jenkins. And when you think about it, to some people it may sound odd. It's affecting the prices of the groceries in the stores.
Well, what's interesting is that consumers will see this probably 2 to 4 months from now because grocery stores have to buy things in advance. But oil and gas are in every part of our food chain, at the farm with tractors, in the transportation to move food to the actual grocery stores, to the packaging we see on the shelves. All of these things are used and why prices are going to continue to go up at the grocery store.
And you talk about the lag effect. We're seeing fertilizer prices. So you mentioned the food. So imagine a year from now, these farmers are buying millions of pounds of fertilizer. When you think about the huge industrial farms across the Midwest. So this inflationary effect on food is here to stay for a while. It's interesting, Ted, it's not just food prices, right? Think petroleum is in so many products that we use every day, you may not even think about it. So economists are saying, and I'm sure you'd agree, that it's part of why the Fed is reluctant to cut interest rates, isn't it?
Oh, yeah. I mean, the Fed's got such a slippery slope right now. Inflation's at 3.1% and can likely get higher because of all the things that are going on. The same token, unemployment is at 4.4%, and we don't want that to get out of control. So it's like, which side do I choose? And the Fed, honestly, is a little bit schizophrenic right now because they made a huge mistake during COVID. Right. They didn't anticipate inflation was going to go up so much. So now they're on that slippery slope. Do we cut? Do we raise? And it's a challenging position to be in.
You know, Ted, as you know as well as anybody, Atlanta is such a heavy residential town, and so many people make money, whether they're real estate agents, whether they're involved in construction and remodeling, the goods that go into improving one's home. And the thing that is killing people, we thought, remember, Ted, 2-3 years ago, that by now, surely mortgage rates would be back below, well below, maybe even 5.5%. They're sticky. And what's interesting, we were talking about it last week in the office, is that it's actually the conflict in Iran. It's pushing up the 10-year treasury, and that keeps mortgage rates elevated.
Well, there's no doubt about it. I mean, we've got a real issue with us crossing $39 trillion in debt this week. Plus, we see what's going on in the Strait of Hormuz and everything like that. I don't see any relief in sight short term in here when it comes to the big three, gas, groceries, and housing. I think people are going to be challenged right now.
Man, the question at the end, the $64,000 question, as you like to say, is, okay, what direction does the market take? And our CIO, Matt Goldstein, is part of our newsletter this week, also has his market commentary. But we talk to members every single day about this. What are you saying on your phone calls?
Well, you have to remember, to be in the stock market, it should be a 5-year investment, not a 5-day investment. So if you're going to be whipsawed by the headline news today, it's going to be problematic, and maybe you shouldn't be in the stock market at all. And that's what people need to remember, that we go through these peaks and valleys. Yes, there are blips in the short term, but in the long haul, stocks have always outperformed every other asset class.
Over time, the U.S. stock market is indeed undefeated. I think it was Warren Buffett who said, if you can't handle a 10% decline in your money, you should not be a stock investor. And he was pretty good at it. That's Ted Jenkins. I'm Justin Farmer. Thanks.